another industry like engineering, you deal with auditing engineering firms, you just deal with that. Because dealing with auditors, like in the brokerage firm industry, since they don't, because an auditor has to know the ins and outs of a business, basically to confirm certain governance and also numbers. But when they're dealing with broker dealers, for example, because their knowledge of how a broker dealer operates isn't, I guess, that well, it always seems to propose an issue.
Yes, and your point is well taken. And maybe sometime in the future, that might be the case. However, the typical audit firm, especially the larger audit firms, they tend to have auditors who are audit specific. They have auditors who only audit financial institutions. They have auditors who only audit manufacturing firms and so on. So they do make an attempt to customize or have a group of auditors so that they can obtain the specific knowledge to a particular industry. They make their attempts to do that. So every year, for example, if they go into a financial services firm, they will send those auditors who are trained and experienced in that area to that financial services firm. They attempt to do that in an effort to get to what you're talking about. And
Okay.
I suspect in time we'll see even greater efforts in that area. Because yes, sometimes auditors go into firms and they don't have sufficient knowledge to conduct the audit. And as a matter of fact, you might be interested to know that any auditor or audit firm that goes into a firm and does not have the specific knowledge, they should recuse themselves typically. But not all of them do because they want the what? Anybody? They want the,
Money.
of course, let's not forget that animal, the money, the money. So sometimes, even though they may not have enough experience to audit a particular firm, they sure is going to take a shot at it and try to do it anyway, even though they may not be able to do it effectively because of the payday. That should not be the reason why they do it. If they go in and they discover that they don't have the expertise to do it, they should recuse themselves and ask the firm to find another audit firm who has the experience. That's typically what they should do, okay? For sure, for the same reason. So yeah, but certainly asking a firm to come up with their own sample, that's an absolute no-no, whether you're familiar with the firm or not. External auditors are supposed to go in and use their own audit techniques to come up with their own sampling programs for obvious reasons, so that the firm cannot dictate the flow of the information and the flow of the samples and the type and size of those samples. Because those samples are used for audit reviews so that auditors can make specific decisions and determinations about what kinds of practices are going on within the company's financial records, for sure. Okay? So if you're walking around anyway, even having a martini at a party, and you hear somebody saying, we're going to ask our clients to collect their own sample, you need to talk to somebody. So I was a little dizzy from my wine, but I remember that's a no-no. They, man, they should know. And Deloitte in particular, one of the big four. See, if this was a big 100 company, like one of the, like the 97th out of 100, say, they need some money. They're prepared to make violations to get it. But not companies like Deloitte. Nobody, no audit firm should do it, no matter what size and no matter what money requirements they have. Remember that thing we talked about in the last two sessions, independence? Man, that's on everybody's list. Auditors in particular, external auditors in particular. And you expect some stuff from your internal auditor, maybe because they're hired by the firm. You expect some compromise, quote unquote, even though there shouldn't be any. But the external auditors, they have no reason, no basis. And unfortunately, whenever they do, it's about money. Coming back next year, and the year after that. Because depending on the size of the audit firms make tens of millions of dollars per year. Man, That's a hell of an incentive to do strange stuff. All right. Okay, keep going, Deandra. Case number 2.
Okay, so RSM to pay 3.75 million to SEC for improper audits.
Okay.
RSM US LLP agreed to pay 3.75 million penalty to the Securities and Exchange Commission to resolve charges Friday over improper professional conduct for failing to properly audit a client, Revolution Lighting Technology, Inc. The SEC charged the Chicago-based top 10 firm and 3 of its senior employees with not properly auditing Revolution's financial statement over a 4-year period when the company was inflating its revenue with bills and hold sales.
Now stick a pen. Alison, are you there?
That's cooking the book.
There you go. That's your, now you got it. That's your thing. That is cooking the books. Okay? Again, keep going, Deandra.
Bill and wholesales generally involves a company selling a product to a customer but not delivering the product to the customer until some later date. Such sales needs to satisfy several criteria in order for a company to be able to recognize them as revenue.
Indeed. So now you're learning a little thing about financial governance and how firms can use subtleties. So see, bill and hold. They make a sale, they prepare a bill, but they don't send the product to the customer until some agreed upon date in the future. Well, according to generally accepted accounting principles, the auditing firm knows or ought to know that the sale is not considered complete until the goods are sent and received. So any billing that goes into revenue before the goods are shipped and received is not considered revenue, but they were still including it as revenue, so that revenue can be inflated by sometimes gazillions of dollars, depending on the size of the firm. That is an absolute no-no. And the auditing firm failed to deal with it. Obviously, the SEC became satisfied that they knew or ought to have known that this was the case. Okay? Even if they missed it, quote unquote, too bad. They ought to have known. But in this case, it appears as if they were aware. This was not a one-time thing, by the way. This occurred over how many years? How many
4
years?
years. 4
4
years.
Four
years.
years. Audits are normally done annually. Unless something crazy happens, if they come in, like the police in the middle of the year, to check stuff. But normally they're done annually. So this crap was going on, not for 1 year where they missed something, but for 4 years, which is probably what ultimately pissed off the SEC. Like, are you people kidding me? You can't even claim that you missed it 1 year. You did this thing for 4 years and you're still trying to tell us you are not aware? Hell no, 4 million. And don't get us mad. The next time will be 4 times 3 or more. Going back to Alson's question, shouldn't they like shut them down, the audit firm? Well, maybe they've decided that the enforcement of money is sufficient in this case, that it's only a little minor cooking the books thing. It's not a major company-wide multi-million-dollar pension loss. See, like that. So we won't shut you down. We'll just fine you and warn you.
So what
I
they do with
mean,
it? What they
why
do with the
shut
3 employees?
Well, they didn't say, but obviously they didn't go to prison.
Should they be dismissed?
Hopefully they are
Or
dismissed.
and their license taken away?
Well, now, also we're getting, see, now we're starting thinking about this governance thing like deep now. See, yes. Okay, first of all, SEC fines them for 4 years of violations. The next thing that should happen is, hopefully, They don't say here, but this auditing firms, RSM US LLP, board, they should have a board, shouldn't they?
Mm-hmm.
And that board should sit down and make a decision about the 3 senior employees, yes?
Yes,
And if the SEC found these guys to be culpable, what do you think the board should do?
let them go.
Yeah, well, that's a nice word, let them go. That's just a gentle word. What's the other word? Starts
Fire
with
them.
fire
Terminate.
them. Okay? And then if they are members of professional accounting institutions like the AICPA in the US and the CA in the UK, and
And
so
Baco.
if it's a compliance issue, BACO. If it's a
Well,
compliance issue, in this case,
what's
it's
the one over
auditors,
here?
our auditors.
Mm-hmm.
Most of our auditors, if not all of them, are governed by international associations like the AICPA, the
Oh,
Association of National CPAs, or Chartered Accountants in London, if they qualified in the UK. Okay,
mm,
whatever the case, wherever they are, those professional bodies, if they get wind of this, should in fact do what? Either suspend or
Terminate.
revoke their licenses.
Since
Of course. Okay. For example, in some instances where board members have found to be misbehaving, sometimes as part of their punishment, or only too rare, unfortunately, but as part of their punishment, they might be told by regulators, you cannot sit on another board for 5 years.
mm-hmm.
Nowhere. Okay. So again, it depends on the bodies that govern each of these areas as opposed to what will happen to persons in these cases. But those are excellent questions. Since
But
the Mhm.
I'm surprised that audit firms would take that risk though, because audit firms also are audited by the international bodies
Yeah,
yearly.
yeah, they take that risk, and you're gonna see that in a minute. Even though they have an over, we're all surprised, Leandra. We all should be surprised, but they do, and
BICA.
not only FICA is part of the overall.
Yeah, BICA audits the auditing firms in the Bahamas as well.
Well, they have even bigger overseers than BICA in the world that govern auditors and accountants in the Bahamas and around the world who are their members. BICA is just the local oversight body. Okay.
Mm-hmm.
And certainly, if there's a violation in the Bahamas, BICA should pick it up and deal with it and report it to the international bodies who issue licenses, also
Mm-hmm.
to their accountants and auditors, of course. Okay. So, yeah, it is a little surprising, but it has happened all too often. Today, we see 3 instances, but I can assure you there are scores and scores and scores. The list is out the door for audit violations. It is unbelievable. All right. Okay. And then finally, DeAndre, the last case.
Okay. SEC charges Friedman with improper conduct in audits. The Securities and Exchange Commission charged Friedman Friday with improper professional conduct for failing to comply with the standards of the Public Company Accounting Oversight Board while conducting audits of 2 public companies from 2017 through 2020. New York City-based Friedman, which completed a merger with top 25 firm Markham earlier this month, has agreed to settle the charges and will pay approximately 1.5 million in total monetary relief. In Friedman's audit of iFresh Inc.
Mm-hmm.
for fiscal years 2017 through 2020, according to the SEC's orders, the firm failed to design and perform audit procedures that would have detected numerous undisclosed related parties transaction by the Asian American grocery supermarket chain, which was previously charged by the SEC with repeatedly filing material inaccurate financial statements that fail to fully disclose related party transaction.
My. Another loaded violation. I'm surprised they only will fine 1.5 million. Okay. But again, and notice the SEC says that they violated or failed to comply with the PCAOB. That is the International Board of Accountants that oversee the work of auditors. At one point in time, there was never a PCAOB. The audit results stopped with the auditors. If the auditor said so, it was next to God's word, quote unquote. However, because of repeated violations by auditors, repeated fines by auditors, the PCAOB board was created in the United States to oversee the work of auditors, particularly those in the United States, and any auditors who are auditing business of companies in the United States, because of the continuous failure of many audit firms, small and big alike, to conduct their audits according to generally accepted auditing principles. Okay. Wow. Spooky. Notice these guys fined for failing to design and perform an audit that would provide disclosure of related party transactions. What are related?
Who audits our audit firm in the Bahamas?
At the moment, we do not have anybody that is acting like a PCAOB. However, because the auditors in the Bahamas are licensed through the most 90% of them or more CPAs are licensed through the AICPA in the United States. If, for example, a local auditing firm is discovered to be conducting any of these audit violations, then ultimately they may find themselves subject to oversight and penalty by the PCAOB. But we don't have anybody locally except for Biker.
Yeah.
Yeah, Biker is supposed to be kind of our local PCAOB. Okay.
Right.
But so far we haven't heard Biker speak up on any local violations. Does that mean there are none? No, it does not mean that. It just means that we have not heard anything. Silence doesn't mean that it's not happening. Okay.
Right.
And I'm hoping and praying that because Biker is silent on these things, that our local auditors are all auditing appropriately. And that
Yeah, but I think PICA has started auditing the local auditor firms.
Lovely.
PICA has started that process because I was with an auditing firm that was getting audited by PICA.
Lovely, because what is happening, I know that Biker may not necessarily be conducting full-fledged oversight like PCAOB, but they're conducting a similar review. In other words, they have this thing that we call peer reviews.
Yeah,
So,
exactly.
Yeah, and Biker is actually overseeing that process. So because no doubt they're doing it because of the existence, one, of the PCAOB, which is the mother of all oversights, including Biker members in the Bahamas. And certainly they're trying to see if they can, quote unquote, ensure that none of our local auditing firms get stuck with some of these problems, okay, for obvious reasons. So hopefully firms in the Bahamas who are subsidiaries of the big firms around the world, and some of them independent firms, get this message. I'm sure they're aware of these things, and hopefully that will encourage them to not get caught up in any of these kinds of violations. Okay, for sure. Unfortunately, we cannot have our auditors being accused of this crazy stuff, because for all intents and purposes, when it comes to financial statements, financial information, etc., we rely heavily on our auditors to be honest, upfront, and to exercise proper governance in the work that we do. Our shareholders rely on them, our firms rely on them, our regulators rely on them, employees rely on them, the government of countries rely on them. We all rely on their independent work. Because if we cannot believe what they say, dog eat our lunch. A lot of people, entities, regulators, and other shareholders will be in big trouble. Okay? So I'm happy as a practicing one thing or the other that these guys are now hopefully getting a message. A lot of them continue to still try to get away with stuff, but hopefully going forward, these fines and these violations are being detected, etc. The oversight boards, etc., will get auditors back to where they never should have been in the first place, and that is being independent about their work, notwithstanding the desire for the money. We get that. We all desire money, but when it comes to certain responsibilities, auditors, for example, money is supposed to be secondary to their independence, okay? And they're doing their jobs correctly. Huge, huge governance responsibility. Okay? All right. That's some food for thought. Okay, so let's take a moment then and see if we can finish up our discussion and guiding principles, and then we'll move on to our discussion with regards to what are some of the central bank concerns as far as corporate governance in financial institutions are concerned. In particular, some of you may or may not know that credit unions are now considered financial institutions, and money exchanges, etc. So all of these entities that were previously not within the net.
As well as EMSPs.
Yes. For the sake of the group, Alexandra, EMSPs means?
Electronic money service providers.
Yes. Okay. They are now in the net. Okay. These groups
So
are
that's
not,
like Canoe. Oh, I don't know all of them.
but those entities.
Anybody who does like the electronic money service providers. I only
Yeah.
know Canoe off my head, but there's like 3 or 4 of them.
Of them out there roaming around doing it. And I say roaming around
I
because
think another one is Island Pay.
Island Pay might be one. Yeah, I think that's one of them.
Yes, Island Pay is one.
What about Suncash?
Suncash is one as well, yes.
Suncash.
Like I said, I don't know
Island Pay.
them off my head, but I know it's about 3 or 4.
Yeah.
Miss Andrea,
Alexandra.
Miss Feast.
Feast.
Yeah.
Does the electronic money transaction that is taking place in the numbers houses, is that monitored by the central bank?
Number houses doesn't fall under us, they fall under the gaming board.
But aren't they
Yes,
transferring? But aren't they
they
transferring
gamble.
money?
Pardon me?
But aren't they transferring money?
Yeah, but
I can say you have an
then-
account. You have an
Yeah.
account. I have an account. You live on in Inagua, and you said, you know what? Put some money on my account. So I go and I put it on your account. That's an easy way of
Once
laundering money.
again, they are governed under the gaming board because
Gaming board.
you're looking at it as you're not looking at it as a financial institution. That's where
Yeah,
you
they
go.
don't have the deposit
Right.
certificates.
Exactly.
So you only could do, I think, up to a certain amount for
Exactly. And the money that they have is supposed to strictly be for gambling.
yes.
That's not
Remember when the
purpose of
loan
their
came about? And they started limiting how much you could put on the island level
Sure.
accounts?
Sure. No long-term significant deposits, no lending activities, no custody activities, none of that stuff. Those are characteristic of financial institutions. The number houses do not do any of those things, and therefore they're not considered to be financial institutions. Their primary function is that of gaming. That doesn't mean like corrupt audit firms, that they may not try something, but they are not supposed to be doing it. And if the gaming board discovers that they are, then they have a responsibility to disclose.
Right. So
So-
they're not financial institutions. That's why I was trying to explain to him. You have
Right.
to look at them in the same token as you look at casinos. Then
Correct.
if you look at casinos, you have to look at number houses because they do basically the same type of business.
Of course, it's called gambling.
Right.
Okay?
So they're not financial institutions.
And of course, don't forget that the gaming board has certain KYC and reporting requirements as well that they have to maintain for their people. For example, if somebody goes in a casino and is seen to be doing some kind of activity that's inconsistent with the gambling process in terms of moving coins and handling money and all that, etc., they have persons in the casinos who are watching this who will report it to their MLRO in the casino. In case you didn't know, casinos have MLROs, and anything that looks suspicious as outside the normal gaming practices will be reported to that MLRO, who must in turn report it to the FIU for investigation. Okay? And so if a number house that falls under the gaming board is discovered to be doing something outside of their purview, they'll be subject to the same review by the gaming board. Okay? By all means. All right. So yeah, that's
Sorry,
some very,
Mr. Ferguson, that clarified your answer.
I'm just trying to be the devil's advocate here,
Oh, okay, you're trying to be facetious. Okay.
in terms of, because, when you look at it, right, even though it falls under the gaming act, but it's the movement of money, and I can move money, within
Yeah, but you can move
using,
money, but see, you have to look at it like this. Technically, you can move money anywhere, but a financial institution
by
is
definition,
moving money.
yeah.
And that's the difference. You can't just look at moving money as a financial institution. A financial institution are those institutions that provides various financial products and services to their customers, credit cards, loans, um,
Deposits, loans,
deposit,
credit cards,
right,
custody,
right, custody, wealth management,
yeah, investment
trust,
products, the
stuff
line, the
like that.
line list goes on.
So you have to look at it as you have to look
Right.
at it in a different aspect because you
But
can move money anywhere. You don't even have to have an account and you can move money online. That doesn't make you a financial institution.
no, it doesn't. Okay, so you have to make sure you're clear on what a financial institution is by definition. And once you're clear on that, you will see that money movement does not define you as a financial institution. Okay, that means I can move some money myself from here over there and do some blah blah blah. That doesn't make me a financial institution. I'll probably be a money launderer first. Okay, by all means. Okay, but yeah, Alson is the devil's advocate. But in being the devil's advocate, Alson, you've now perhaps made it possible for some persons in the class to be what? Enlightened, okay? Including yourself on one or two issues. So that's fantastic. All right. So let's pick it up from last time. I think we were talking about the board committees, etc. And so we're going to look specifically at the types of committees that boards ought to be considering, because committees are such an integral part of the board process, for better or for worse. And we would be remiss not to look at these committees in terms of their responsibilities. Some boards fail to govern properly because they don't have the appropriate committees in place. Some of them don't have the appropriate committees in place because they don't want any committees policing them. Imagine that. So they don't appoint any. How about that? That's a whole different ball game. Those are the subtleties now that we don't necessarily see in the formal learning process that we're looking at. But remember, behind the formal requirements of institutions of any kind, we have people and their own agendas. That is a whole other issue, okay? But we're talking about what should be. And you probably noticed by now, I'm talking about what should be, I have a tendency to throw in some of the things that are actually happening that shouldn't be happening, okay? All right, So let's see. Okay, Alison, you're the only guy in the room.
We didn't go through the committee last class. I feel like we did. We
Did
went
we?
through the auditing committee, the compensation committee. What else we gone through?
We started the board committee structure.
Yeah, I think we looked at it probably, maybe in its general context. Did we go through the details of what these committees actually do?
No.
No.
Okay.
Okay. And so I want to walk you through some of the things they actually do, not just the overview, like for example, the audit committee looks after the external auditors, etc. But there's a little more that goes on in the audit committee. The audit committee is so crucial because if the audit committee, for example, is functioning optimally, a lot of the crap that you see going on with auditing firms, for example, and otherwise probably would not occur. But sometimes audit firms even override audit committee work. Audit committee members become buddies with the senior partners in audit firm. They sit down over a martini and agree to get their own samples and agree to abuse some of the audit practices and agree to not disclose certain information that they should and agree to all kinds of weird stuff. And I'll be damned if the external auditors can get audit committees to agree to stuff and vice versa. That is a major corporate governance violation. And maybe, no doubt, that some of the reasons why we see some of the major violations that we see. Because a lot of times, for example, these problems occur not in isolation. For example, if two people are opening cash every morning for the night depository, in order for something to go wrong generally, there has to be collusion. The two persons who are supposed to be watching each other have to agree, and sometimes they do. Let's take some. Because if one agrees and one don't, that's a problem. But if both can agree, it's called collusion. And I can assure you, collusion does not only occur with persons in the bank counting night depository cash or in the casino covering cash count. But no. Okay. By the way, some of you may not know that cash counting in a casino occurs in a very specific place with cameras everywhere. Now, why are cameras everywhere? Aren't people inherently honest? Anyone?
No.
No, apparently not. Because if people are inherently honest, then why do you have cameras everywhere in the room? Like 4, 5, 6 cameras all around the room. Why don't
They
you
have it in the bank as well.
Of course.
Mhm.
I picked the casino. Of course, they have it in the bank. But then aren't bankers honest?
No, sir.
Not,
No, sir.
not all of them. Okay. And a lot of gazillions of dollars goes on counted in banks and casinos, etc. And so they have these cameras so they could watch people, keep them from slipping $50 every night, $300 every night, whatever it is people do or they think they do. Okay. And of course, the cameras, believe it or not, are considered part of the what? The internal control process. Remember that word? Internal control. Remember, the board is responsible for internal control issues as well, to make sure that they're in place, they're written, and with the help of internal audit and compliance, that they're being done. And if any reports come to the board level that any of them are being violated, it's the board's job to act on it. Make sure it gets resolved. Even if it involves the CEO and the CFO. That starts to get tricky then, because the CEO and the CFO may be the chairman of the board's friend, relative, favorite girl, guy. I don't see any of these things in the formal learning, but in the real world, they impact a whole lot of the process. That's why we have problems. When we shouldn't. Okay? My. And if any of those conflict of interest, see that's another word. Conflict of interest issues are existing, and it often leads to governance violations, unfortunately. But this is nothing new. Mankind has been stuck with these things forever, governance issues forever, and we're still stuck with them, and that's why we constantly try to keep ourselves updated and reminded. See, updated and reminded. Once upon a time, we just had a training session once to update. Okay, it's the update. But now we have to do it on a regular basis so people can be reminded. Most people say, I don't need to be reminded. But the truth is, we do need to be reminded. Because sometimes if we're not, creates governance violations as well. All right. So let's see then quickly some of the issues with the board committees. Okay. First of all, the audit committee is responsible for financial literacy standards within company and at the board level. These guys have to have, when I say guys, I mean guys and girls, have to have a certain amount of financial background. Doesn't necessarily have to be at the CPA or PhD level, but they certainly need to have some idea of financial statements and how financial information works in general. That would be preferable. Yeah. In some instances, depending on the size and nature of the firm, committee members are required to be experts in their field. For example, CPAs or CFAs or whatever the case might be. Because the policy might require one or two of those persons to be sitting on the audit committee, only because they would be able to understand the language of the external auditors and the internal auditors far better than somebody who does not have that background. Okay, so they need to have the financial acumen to be able to understand what's going on. Overboarding, again, persons who are on audit committee have to make sure that they aren't sitting on too many committees. Because after a while you get all confuddled, overwhelmed, overworked, and you can't make great decisions. You can't spend the time looking at what you need to be looking at, and then your job as the committee member becomes compromised. Okay? For sure. The other thing the audit committee is responsible for is selecting the outside auditor, finding somebody who will not let them do their own samples, hopefully, or some such crazy thing. Finding an audit firm that is reputable and that isn't famous for being fine for undercutting the generally accepted auditing principles. Some audit committees unfortunately look for firms who they feel are compromised so that they can swing them, quote unquote, which should never be in the mind of any audit committee member or even any external auditor. But again, we're looking at what it ought to be. Okay, so their job is to go out and find an appropriate outside audit firm that can meet the requirements, including the governance requirements that firm needs, to make sure that firm is independently audited. And it doesn't put the company in a compromising position by failing to disclose proper information or lying about any information that they have discovered from the audit. We shouldn't be thinking about any audit firm in that way, but it's important. They also have to make sure that the auditor is independent, that the audit firm does not have any connection. Like, for example, if they go to get an audit firm and the audit and one of the senior partners in the audit firm is the brother-in-law of the chairman, that's not a good idea. I'm not saying they cannot conduct a good audit, but that could be a conflict of interest. And so the audit committee has to be looking at any conflict of interest issues. Any auditor that does not have the ability to be independent because of any kind of relationship whatsoever. The committee has to look at these things, and if they spot it, do not take that audit firm on. Find another one. Okay? Big time job. Financial statements, the audit committee, their job is to be able to discuss what's in that statement. Do that portfolio analysis that Benitra mentioned. Look at stuff, see if it looks right. Look at the financial disclosures, see if they cover all the important information. See if they pick up on anything that's inconsistent. Raise questions. Make sure that those financial statements basically meet the generally accepted auditing and financial principles, and especially the requirements for that firm. So you can see the audit committee's job is not just blah, blah, blah. It's one of the most important jobs in the firm, and certainly on the board. Okay. All firms must have internal controls. We talked about them. The audit committee's job is to make sure that those internal controls exist. They're in writing. and they're being adhered to, carefully reviewed by the internal auditor and external auditor, and any information that is reported to the audit committee about any failures, the audit committee's job is to make sure that those failures are corrected. Any products that have any risk and services that have any risk issues, subject to money laundering, terrorist finance, anything of that nature, the audit committee has to look at those things because they have financial implications. Any stock market rules that are out there that may be violated, as we've seen in those examples, SEC examples, the audit committee has to be on top of their game. And if they find that the audit firm is doing some stuff that is not acceptable, they may have to get rid of that audit firm. Maybe even in the middle of the audit, depending on what goes down. Okay. So this audit committee, this is no fly-by-night committee. This is a very serious governance committee. And any average to large firm, maybe even in some cases smaller firms, who are dealing with tens of thousands and millions of dollars, they need to be thinking seriously about such a committee. Again, some boards may not have such a committee because they don't want to be under the scrutiny that this committee requires. Others might have the committee, but maybe try to restrict it so that it only looks at the bits and pieces and don't press the issue. Those should never be the reasons. The reasons that we're seeing here and discussing here and reading here are supposed to be the things that should be happening in practice. Are they all happening in practice? Hell no. Why? Because folks are folks. But again, we try to put these things in place, compliance and internal auditors and external auditors and committees and INEDs. All of these persons and groups are in place to try to help in the fight against corporate violations, governance violations. Okay? Because folks are always going to try a little something here and there. And there and there and there. Okay? Audit committee oversees compliance, believe it or not, and the internal audit process. Again, these are the groups that are responsible for the checks and balances within the system. Anything that comes to the board level from compliance and internal auditors should go to the audit committee for review, and they will then follow up to make sure that the violations are corrected. And of course, report to the board, naturally, what's going on and what they did to fix them. Okay? So this committee is a serious thing, especially for medium and large size companies and smaller companies, but especially for those medium and large size companies dealing with millions and billions of dollars. My mind. So that's the audit committee. Then we have this other critical committee called the nominating committee. The nominating governance committee. Who are these guys? Well, they are not dealing specifically with financial issues and compliance issues directly like the audit committee, but they are the ones who have to look at the directors themselves. Are these people on this board qualified to be here? My mind. They make recommendations typically, or should, as to who should be members of the board, for how long, and if somebody needs to be taken off the board, present recommendations as to why. Okay? Wow. They conduct annual reviews of the board to make sure that it has its specific numbers it needs. If it's too small, add some members. If it's too big, take off some members in terms of making recommendations for these things to be done so that at the end of the day, the board is functioning what we call on all cylinders. They are also responsible for succession planning. Does anybody in this class know what succession planning is? What is succession planning in general?
So when one board's time is up, they have to make sure that the next board that's coming in will be already planned or whatever.
Yeah, if they need to change boards entirely for some reason because the policy requires it or the shareholders require it, they need to be able to have something in place to replace those members with new members. If individual board members are retiring or need to be fired or asked to resign or whatever the case might be, it certainly helps us process in place to replace those persons as required. Okay? In the Bahamas and around the world, no doubt, some board members serve on boards for a long period of time. Whether that's good or bad is another governance question. Should boards be given limited time on the board, or should they be able to sit for an indefinite period of time? That is an ongoing question, but that is also part of the succession planning process and a decision that boards will make independently. It is oftentimes felt that the longer you sit on the board, the better you should be at making decisions that's good for the company. Others feel quite the opposite, that the longer you sit on a board, the more complacent board members tend to become, and therefore the decisions they make are not necessarily the best ones for the company. The debate rages on. The point is, though, it's part of the succession planning process. Okay? If the CEO leaves or is fired, you need to find a new one, CFO, a new one. All of these are part of succession planning. If the CEO, CFO, whoever it might be, is going to retire soon, they need to start the search for the new ones, all part of the succession planning process. Okay? The nominating the corporate governance committee, crucial decision making that are non-financial in nature, but absolutely crucial because they will impact the financial performance of the firm going forward, by all means. So audit committee, crucial. Nominating committee, crucial. And in looking for successors, they have to always be looking carefully at background and experience, whoever that's putting in place, whether CEO, CFO, chief legal, or whoever, compliance, whatever the case might be. They have to be looking at the background and experience of the person. Are they independent enough for the job that they're being hired to do? All these things you have to look at. How long are they going to be in that job, etc. So the nominating committee, man, serious thing. Okay. Committee structure, they look at how many committees there should be. Do we have too many, too little? Do we have the right amount of committees? Do we have the proper committees in place, or the key ones like the audit committee, the nominating committee, the compensation committee, or any other such committee that may be required by the board? That is all done by the nominating committee. Okay? They're the ones who look at the board as a
Are
whole.
you back? I want to talk to you about my cousin who interested in applying for SPL.
For what?
Huh?
Um,
I in class. I got my, oh Jesus.
Okay. Does anybody know what an SPL is in this class?
Scotia Plan loan.
Absolutely. Does anybody want to know how I know what an SPL is?
Because you worked at Scotia Bank.
Because
Worked at Scotia Bank.
I don't work at Scotiabank currently.
No, worked. ED.
Yeah,
Worked at
yes,
Scotiabank.
yes. I was a loan manager at Scotiabank many decades ago. And I did tons and tons of SPLs and tons of SPL. Okay? As well as tons and tons of mortgages that used to go to our head office in Canada back in the day. And tons of commercial loans back in the day. I cannot believe how quickly the decades pass. Okay? Spend many nights leaving the Bay Street East branch at 11 o'clock, trying to conquer the world, I thought.
Yep.
Okay. Spend many weekends and holidays in the Bay Street East branch, in the main branch downtown, and Scotiabank when it used to be in Cable Beach, and so on. So it's a long time ago. Some of you are not even familiar with Scotiabank Cable Beach. And I'm not talking about the one that was in the Cecil Wallace Whitfield building either. I'm talking about the one that was before that. So that goes way back. That must be 1902 or something. All right. So the nominating committee, again, in addition to board oversights, they're also responsible for corporate governance guidelines. See, they have to be checking it to make sure that the guidelines are in place to make recommendations to improve them. So if somebody wants to nominate you for a nominating committee, be careful how you say, I'll do it. Because as you can see, it is no child's play. Okay? And it doesn't stop there for them. They are also responsible for two other critical things. Engaging shareholders, which is not an easy task, making sure that the board is communicating properly with shareholders on a regular basis. So some boards don't like to talk to shareholders because shareholders have demands and some boards don't want to meet those demands. Some boards are doing things that are inconsistent with shareholder requirements, as if they've forgotten who the owners of the company are, and so on. So these things are very real. And so the nominating committee's job is to make sure that there's continuous discourse between shareholders and the board to make sure that they are constantly on the same page, that boards are not hiding information from shareholders, that shareholders are not becoming too overbearing in terms of the requirements that they expect of the board. But in any event, they're talking to each other regularly. Okay? And then finally, but not least, is the issue of director compensation. This committee is responsible for how directors are paid. I don't need to say how people are paid is always a tricky question. For example, two people might go into the same firm to do the same job with the same experience, but for some reason, one person ends up being paid significantly more than the other. Does anybody know how that happens? Or why?
Negotiation.
They both negotiate. But that's true. What
Better
one
negotiation.
better negotiation? Okay, I like that. Any other suggestions?
One may have more experience than the other.
Same experience in this case.
One may have bending flexible morals.
More flexible morals. Yeah, more flexible morals. Okay, I like that. That's a very euphemistic way to put something very dark and dangerous. But yes, that's true. They might be prepared to be more flexible than the other one. To bend the rules a little bit, maybe. But what about some old traditional reasons like that's my friend, so I'm going to pay my friend more?
I just was gonna say nepotism.
Yeah, nepotism of some kind. That's my old girlfriend or boyfriend, and I still like them, so I'll pay them more.
Or gender equality.
Yeah. Well, gender equality is a whole other issue because
Misogynistic.
yeah,
Misogyny, huh?
yeah,
Pay
yeah,
the
yeah.
man more because hey,
Yeah.
he's the man.
Yeah, because I still believe male CEO get paid way more higher than a female CEO. A male CEO they'll pay to something easy. Female CEO they still want to pay you 150,000. Do the same work.
Yeah. Well, they're getting there. They're getting there, and sooner or later they'll all be paid what they should be paid eventually, and then we'll have something else to argue about for sure. No doubt about that. And then soon we'll go from equal pay for everybody to, uh, if you, again, hopefully we don't get to all the other crazy stuff, but compensation is a very tricky area. That's really the whole point. Outside of the issue of equal pay for equal work, that's going to eventually level itself out, but there are all kinds of other crazy reasons for compensation that really don't even refer to somebody's competence and all this kind of stuff, or even their gender. Well, not male, female, anyway, some other gender
Racial
issue.
discrimination.
Ah, my God. See? And the list goes, see, compensation committee. Yes. The list
Sexual
goes-
orientation, all forms of discrimination. Huh?
Mother's sick. Yes. So whoever's sitting on that compensation committee, they need to be careful about what the criteria is for compensation. And some of those things you just said are all the reasons and more. And they all impact fairness in terms of the compensation process. And the committee has to somehow find its way through all that. Trust me, you all know, should know by now, it's easier said than done. Okay? But they have the authority to do it. They need to exercise that authority properly. use good governance. Okay, because they have to make decisions about senior management and CEO compensation, board compensation. They have to make sure that the company, the decision to pay shareholders, etc., and recommendations are consistent. They have to keep the jobs fuddled with money. Everything is fine until it comes to money. Everybody's happy until it comes to money issues. Everybody's married until it comes to money. Everybody loves each other until it comes to money. Man, it's a crazy thing. Okay, but it's as old as Methuselah, and we are constantly battling with it. Okay,
Love of
cost,
money is the root of all evil.
yeah, everywhere it impacts everything, and compensation committees are not excluded from the process, for sure. All right. They have to ensure that the protections are in place that will allow senior management to focus on what's in order so that money issues do not drive their decision making. Because remember, if people are told we'll pay you based on X amount of output, then people start faking the output, even cooking the books, even whatever they have to do to get more money. Because one person said many times, many persons have said, we never get enough money, unfortunately. All right. Compensation committees have to look at the risk involved in the overall compensation structure and make sure that they don't pay out more than they should, less than they should, and that the compensation does not lead to excessive risk taking by senior management people who might be driven more by profits than by performance and what's best for the company in the long term. Big time job. And again, let's not forget the directors' compensation. Just so the audit committee has to look at the directors, the compensation committee has to determine what the director's salary will be. That's always going to be tricky. So a lot of times people put compensation persons on the compensation board who they know, like who their friends, etc. So when they say, I think I should get director's fee every 3 months or $10,000, nobody's going to disagree and say, well, it shouldn't be 10,000. That's too much for this particular size firm, etc. And the work that you do, they don't want that. They want somebody who's going to be agreeable in terms of director's compensation. Director's compensation is oftentimes subject to the herd mentality, where everybody's they're all friends, and then they agree with a handshake and a drink. Okay, I think we should increase our compensation to 15,000 next year for no particular reason. And because everybody on the compensation committee, they're all buddies, it's a great, it is agreed. Who seconds it? Somebody seconds it, and then that's it. Is that the appropriate thing investing for the firm? Not necessarily, but these are all part and parcel of the governance process that persons who are responsible, in this case, the compensation committee, have to be careful, okay, in terms of how they manage these things. All right. So, committees, I think, and I hope, and our discussions have obviously shown that we understand the overriding importance of committees at the board level. And the ones that we've talked about are really, quite frankly, the key ones. And there are other committees on the board, social committee. Can anybody think about another committee that might be on the board?
Compliance.
Yeah, there might be a compliance committee, even though the audit committee might be doing that. But any other committee might be on the board? Or you'd like to see on your board? Let's see what comes out. What committee you'd like to see on your board other than the ones we talked?
Risk management.
Yeah, a risk management committee. Why not? Again, audit committee might be responsible, but they may be so bogged down in financial statement issues, they may not be able to do the work of risk management well. So yeah, a risk management committee, especially in today's risk environment with all the great big emphasis on risk, that would be a great committee to have, so that they focus only on risk issues that are impacting their firm. And they have no distractions about any other kinds of things like financial statements and audit disclosures and all this crazy stuff, fighting with auditors and so on. So yeah, that would be an excellent committee to have at the board level. So if you sit on the board presently, or if you find yourself on a board and there's no risk management committee, that would be a great recommendation to make. Hopefully the rest will agree with it, not throw you off the board as soon as you get there. But the importance of it cannot be understated. Okay. Board operations, we basically have an idea of how that works now, and we'll see a little bit more of it when we get into the central bank's best practices for financial institutions. Of course, these practices, being under the guiding principles, all out of OECD originations, creating these generic practices that any entity is expected to consider. Because we know that practices will vary from entity to entity, but so far, all of these things we're talking about, they are fundamental and generic to any entity. And we can make some adjustments in our policy and how we implement them and monitor them. But basically, fundamentally, these kinds of things should be existing in some form or another on any board, anywhere. Okay, even church boards. Why not? Do church boards handle finances, anyone?
Yes, all them collections and tithes.
Yes, my foot. And donations from unknown sources.
I don't like how you said that.
And donations from unknown sources. I'm trying to prick somebody's brain to see if somebody will come up with something out of the box. Alison, anything out of the box?
So not right now.
Well, sometimes the money, primarily the money that comes into a church is from collections, but it may not all be collections. Is it possible that churches could be involved in laundering money?
Yes.
Or why not? Just because it's a CURCH? Remember, church and Jesus are not the same. Anybody aware of that?
So true.
Sometimes we think so. We think like if we say something against the church, we're saying it against our Lord and Savior. We are not. Okay? The church is a building where we visit to worship, and we're supposed to behave a certain way. But not everybody in that building that we worship behave appropriately from the top down, just like any other firm, just like any other entity. So when you come into the bank, for example, with $15,000, you have to disclose the source of funds. But when you go and make a donation to the church, they're not required to do a KYC on anyone, are they? Are they?
Why always put a number on it to the bank? You all know the bank could question $1.
Yeah, and there's a reason why they question the dollar. But yeah, there's no specific number. If somebody comes in with a $2,000 deposit, you shouldn't. I mean, you might say, "Well, where'd you get it from?" Somebody said, "Well, it's income from somewhere," and then you might say, "Well, it's only $2,000, so you don't press the issue," or you might piss them off and say, "Well, you have to bring proof of it," and then it's, "Oh God, for $2,000." That's why.
Yeah, that's what I'm saying. The bank could question $1 if it starts
Yeah.
from $1 to
Yeah, but what is the
15,000
threshold?
anything.
What is the threshold, anyone, for the banks?
You can't say.
There's no threshold at the moment?
You can't say what it is.
I thought it was 10,000 or 5,000.
We
No.
can't say what it is.
No, yeah. Before we used to say 10,000, but now
you
it's
can't say.
on customer. Because if it's a customer who works at, for example, Wendy's, who we know makes up to $1,000 a month, and they come into the branch with $10,000 or even $5,000, we would
They
ask.
can break it up.
Yeah,
They can try to break it up.
but we have internal controls in place to monitor customer accounts for stuff like that as well.
Yes. And you can't tell people, oh, well, since you bring 10,000, we have to question it. You can't tell that. That's called tipping. It's any amount of number you see, And if you feel, I guess, if you feel uncomfortable with, so if I feel uncomfortable with Mr. Wilkinson, you bring in 50 cents into the bank. I question it. If it's 50 cents more than your pay, I guess we could question it.
And if I say it's only 50 cents more, what's the problem? What
I
happens?
can't tell you the process from there.
I know.
I mean, I
So-
know the process, but I'm saying we cannot divulge the process.
I know. When I say I know because I'm a former banker. That's how I know.
Okay. Mm.
But I get it. And so, yes, for those of you who might not know, and for those persons who might not know, there is this structure, okay, in place in an effort to try to control the blah, blah, blah. Except that, well, I wouldn't give any trade secrets. You'll find out in due course if you decide to indulge in anything that is untoward. If your money is legitimate, you will not have any problems with it. You shouldn't have any problems with it. No financial institution should, like we say in the Bahamas, lick you in your hair with a conch shell if it's legitimate income. Legitimate income, for the most part, is easy to prove. I mean, if you move somebody's garbage and they give you $300, that's hard to prove. Even if it's true, you said they give me 300 for moving the garbage, and they said, must lying, okay? And then you say, well, what is 300 anyway? It's immaterial, and the answer to that is true. And so again, it's all relative to the circumstances. But again, these are all derivatives from the governance process in order to try to ensure to the greatest extent possible that persons are operating in the parameters of good governance and not seeking to violate the rules of good governance, okay? For sure, whether it's persons who are customers of the bank or whether it's the bank itself, okay? We know from experience that other people send wire transfers to financial institutions that for some reason are accepted by financial institutions that oftentimes should never be accepted. It should just be returned because it cannot by any stretch of the imagination be proven or justified or is not justified or proven by the sender. But sometimes, all too often, they still get by for one reason or another. Again, these are all governance issues that financial institutions are constantly battling with, okay? For sure. All right. The board operations, I think we know by now that what the board is designed to do. We've talked about it previously, and we'll talk a little bit about it when we get to the CBOB best practices, which is really a great read. Make sure you read that one way or the other. But boards generally are responsible, we said, for overseeing the company, setting up committees, and directing the affairs of the firm on behalf of the shareholders. They make the board meetings happen as frequently as required so that they meet sufficiently to do the business of the company. Whether it should be once a year, twice a year, 4 times a year, or whatever it might be, that decision is made at the board level. The point is they need to meet sufficiently so that they can do the proper business, not hurry through the business of the company and run off to some other board meeting. Okay, and since we're speaking of running to another board meeting, overboarding, be careful with overboarding. Anybody got that far? Like, what is overboarding? Anybody knows?
A person who sits on multiple boards?
Yeah, multiple boards. Multiple boards are okay. When do you think overboarding occurs? When do you think, but sitting on multiple boards is okay. When do you think that overboarding might occur?
You can't handle the capacity of the work?
Yeah, when you when you're sitting on a board, on so many boards that you are beginning to become inefficient and ineffective. You have too many issues to deal with, and so as a whole, all of them suffer. Okay, so we have to be careful. The board has to be careful that its members are not overboarding. that if they have other board responsibilities, that then they're not conflicting, and certainly not so many that they cannot commit to the responsibility of the boards that they're actually sitting on. Okay, overboarding could be a problem, and hopefully it doesn't exist in too many situations. There's a point on executive sessions that the board needs to make sure, and there's a reason for that, that the board meets outside of the senior management team. Because oftentimes when boards meet, they invite senior management team, CEO, CFO, legal, whatever the case might be, compliance, and so on. But there are times when the board should only meet as an executive outside, but without the senior management, because they have certain things that they need to discuss at the board level that might involve the CEO and his team, and they may not want them to necessarily be a part of that discussion, because the part of that discussion might be some stuff, that concerns that they have with them, that they need to actually implement and have corrected. Okay? Or worse still, they may be getting ready to get rid of some of them, and so they can be in that meeting that they're discussing whether they should get rid of them or not. Okay? For sure. So these executive sessions with only board members alone, they are absolutely important. We all know that boards should have an agenda. You shouldn't go into the board meeting helter-skelter, and that the board should be in constant contact with the management of the company. They shouldn't be strangers. Some boards are strangers with the management of the company for some reason. They only have board meetings from time to time. They don't have too much discussion with the management. That's never good. Information should be flowing back and forth at all times between senior management and the board and the shareholders. This is a very serious governance requirement that is oftentimes not put into practice, okay, as much as it should be. But this communication across the line, down the line, horizontally and vertically, should always be going on between board, senior management going down, and shareholders going up. I think confidentiality speaks for itself. If you're not a confidential person, you should get off the board. If you're found to be non-confidential with the board's information, you'll be kicked off the board typically, unless you're somebody's very best friend on the board and you could not be confidential and still sit. Some people could violate all kinds of things and nothing happened. Other people only get a chance to violate it once and they're out. That is a whole other problem. Clearly, that's a governance problem as well. As you can see, in all aspects of our discussion, there are governance pros and cons. Okay, so this is why the issue of governance continues to come to the fore. This is why the issue of governance continues to be a part of the annual and regular training process. Doesn't matter if you've heard it a million times before. It's like when we tell our children, did you brush your teeth? Remember, we tell them that for a period of maybe somewhere between 15 and 20 years before we stop asking them. In some cases, after they pass 20. Excuse me, John, I know you're 30, but you never liked brushing your teeth. Did you brush your teeth? And he's like, oh my God. Okay. We have to continuously be putting it out there and reminding persons. Board members in particular do not like board training because they think they know it all. That's what's interesting. And so when it's time for them, which is why some regulators, most regulators make it mandatory, force them to sit down and listen. And even then, some of them, like, they'll send their friends, like, you go and tell me what happened. Because they don't think they need it. And they definitely don't like to be reminded. Like, man, I don't need to be reminded. It's stupid. It's not that at all. And oftentimes, those persons who don't like being reminded, sometimes they might become suspect. Like, why don't you want to sit in? Are you in violation somewhere? Is this stuff doing something to your conscience, Mr. Board Member? Or whatever the case might be. Okay? Of course, we already said the board is responsible for compensation, primarily through its compensation committee, but ultimately the board itself will make the decision education issues are. That's a committee you might want to have, an education committee. Okay, that might be an important committee for a particular type of board, whose job is to see what board members might need to be sharpened up on certain areas and actually hold little sessions for their own board members. Okay, if they have a weak side, for sure. And certainly one of the big issues outside of board committee evaluations and training, etc., is this thing that boards have to rely heavily on their people down the line, primarily the senior management team. They have to be able to accept whatever senior management says to be is true and act on it accordingly, which is why it's important for senior management to disclose the correct information to its board and don't lie to them, which many senior managers do. They lie to their boards oftentimes about stuff they don't want them to know. They hide information about financial performance that they don't want them to know. That is a serious governance issue. Because when they do that, the board is going to rely on that and make decisions in relation to that. Because the board cannot be there from day to day. That's not their job. So whatever senior management says to them, they rely on it, obviously. Just like when information comes up to a general from the lieutenant or the colonel, they all get information from down the line until it gets all the way down even to Private Ryan. Because Private Ryan may be the one at the front line who gets the information first. That's critical. And then they send it up. And depending on that line, by the time it gets to General Hog Dog, it could be a whole mess if it's not done properly and create a major problem. Same thing happens in firms. If the information going up is not adequate or correct, especially correct, then the board will be making decisions on inadequate and or incorrect information. Serious violation. No board should tolerate any incorrect information, especially if it's done on purpose. Somebody makes a mistake, fine. Nothing wrong with a mistake, nothing wrong with an oversight. None of that stuff. That's fine. That happens. We're all human. But once we get to excessive mistakes and deliberate misinformation, then we're dealing with a completely different animal from a governance perspective. And boards must be prepared to deal with these things. Okay? For sure. Boards should also be prepared to be subject to remediation when it comes to their shareholders. Because their shareholders are relying on the boards to tell them the truth. And sometimes boards lie to shareholders more often than they should. Serious governance violation. And this information we are looking at and talking about are really just to remind us or to give us first-hand information or to get us prepared for those of us who may never have been exposed to this crazy stuff. All right, to the many governance requirements that are happening at all levels of the organization. Okay, up and down, from the bottom to the top, from the board to the top, from the board going down and across the organization, whatever type of entity it might be. We already talked about succession planning. It occurs at the board, it occurs at the senior management level. It is absolutely crucial, okay, to the process of effectively running the company. If somebody is leaving, we have to find a replacement. You have to find the appropriate replacements. You have to find competent replacements. You have to find replacements that are going to practice good governance, persons of good reputation. Okay, all of these are things that are responsibility of the board. They're responsible for making sure that management is properly developed, properly trained, and competent. That the CEO is subject to evaluation, just like other people. Every year, you guys get a performance appraisal report that you have to read and say if you're satisfied with it. If you are, you say, I'm fully satisfied. Thank you, Lord, for this report, and sign it. If you're not, you still have to lie and say you're satisfied in some cases, depending on where you work, because people don't like you to say you're not satisfied. But you do have the right to say you're not satisfied. Has anybody ever said they're not satisfied on a performance appraisal report in Wisconsin? At any time in your working life?
Yes.
Yes, sir.
All the
Okay,
time.
Yes,
excellent,
sir.
excellent. I'm happy to see you're not afraid to say you're not satisfied or you don't agree. Okay, back in the old days when I was a young young loan officer, and I would get my performance appraisal report, and then I would write like little narratives about things I disagree with and provide my reasons why. They hated that. Okay, they always give me that nasty look like this young punk with an afro. Why don't you just sign it? And I wouldn't just sign it all the time, and they hated that. And of course, I met some blah 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 as a result, but that was okay. It was all part of my development process. And right is right, no whether you agree or not. And I have a right to disagree. And there's nothing wrong with people who disagree. That's the whole point. Somebody disagrees. I mean, I've had staffers that I've done reports on all through my career. They didn't all agree, and that's fine with me. I have no problem with disagreement. And if they give their reasons, I disagree because this thing, that thing, that's fine. It has to be, for me to be concerned about it, has to be a major issue that's going to impact the firm and their performance. But if they disagree because of some issues, they have a right to do it. And there's no under the sun I'm going to hold it against them personally. A lot of times in firms, we have a governance problem with holding things against people personally that we shouldn't. It's wrong. That's a governance issue too. Shouldn't be that way. Okay. All right. So, having said that, we have now pretty much exhausted our discussions and our overall reach with regards to corporate governance in its generic sense, those things that should exist out there in just about any entity, if not all of them. The only other thing I want to say about guiding principles is that in our governance activity at the board level, at the senior management level, at the company level, whatever that might be, we have to always keep two groups of people in our minds, especially at the board level. And they are called shareholders and investors. We have to be in touch with them. Know who they are. Know what they want. Know what information they require. Okay? Understand what's important to them. After all, they put their money in your firm or in the firm. And so therefore they're entitled to information. They're entitled to proper disclosure. They're entitled to the truth. They're entitled to dividends. And they're entitled to have their firms managed in a way that will increase the share value that they have in those companies. That is not asking too much of any board or any senior management team. That is a requirement. Does it always happen in practice? No. Should that be the case in general? Yes. And that's what we're here to discuss, that this is what it should be. Okay? Serving the interest of the shareholders and the investors. Keeping in constant contact with, answering their questions. Do you know that there's some boards who don't even like to answer questions coming from shareholders? They try to avoid them, or they give them some answer that's not true. Imagine that. Should not happen. That's not the proper engagement for shareholders. That's not good governance of the firm. That kind of stuff can create instability. If shareholders find out you're lying, then they have to fire the board. Then the company becomes unstable in the middle of the year. You have to get a new board. The new board has to become acquainted. See, it's always a far-reaching effect when we do not engage in proper governance, whether we are aware of it or not. My. Remember, shareholders are not uniform. They're not all the same. They have different interests. They're all shareholders. They all purchase shares in the company, whether they're majority or minority shareholders. Some board members think that they only have responsibility to majority shareholders, those who hold the majority of the shares. That's not true. We have a group called minority shareholders, just like minorities in society. Because a group of people are minorities, shouldn't they have the same opportunities? The answer is yes. But we know for sure it doesn't happen as it should. Same thing with shareholders in companies. Minority shareholders are often ignored. That's not good governance. They have to be included, just like majority shareholders. My. After all, they all have a right to vote, change the board, change the composition of the board. So their interests, their questions, their proposals, all of these stuff need to be dealt with. And last but not least, for sure, let's not forget about this other group called employees. That's like my grandma used to say, that's meaning you people who work for the firm.
Can I ask a question?
Definitely.
Who represents the minority shareholders?
The
On the
board is supposed to, the entire board is supposed to represent them. That's a good question. Are they always well represented? No. And if they're not, that is a governance violation. Something to think about. Okay?
Well, the reason why I asked that question, at an annual general meeting is when all directors are elected, right?
Right.
And the majority shareholders, or the majority, which is basically the owners, has the voting power.
Right.
And he can use his voting power to select his people that he wants to the board.
Correct.
How do you defend the minority shareholder in those cases and to have them represented at the board?
Unfortunately, unless you have very prescriptive information written into the rules, their interest is often overlooked. For example, if the rules do not say clearly that minorities get the right to select outright one board member, for example, then dog eat their lunch. They'll just have to continue with whatever the majority says, just like an election of in politics.
I ask that because I can bring up I can give an example of it, and
Yeah.
And that's in the case of Bank of the Bahamas.
Yeah.
And I think 3 years ago,
Yes.
where they decided they're gonna elect a director,
right,
to represent the people of minority, in that person also is a minority shareholder,
right.
Which was a good and proper idea.
Yeah. That was a good idea.
The majority of their board were really government elected persons.
Yeah. Yes. Just like a ministry or quasi government board. Yeah.
Every 5 years, government change and they put their people to represent, and the minority shareholders did not have represented on the board.
Yes. And so the idea to have one of the minority shareholders be elected to the board for whatever reason and to whatever extent.
Just really to show transparency.
Yeah, it was a good gesture. And hopefully we'll see more like that going forward. The other thing that's interesting about a board like Bank of the Bahamas, I think Bank of Bahamas the government has the majority of shareholdings, maybe some 50-something%, and then the rest, other 40-something% by other people. And so the government gets
it's actually controlled by the government and NIB, so you really have no say there. So it's still government.
Yeah. So yeah, which raises the question of, can, under those conditions, is it possible, and we're talking strictly from a governance perspective now, we're not talking about from the political side, even though we know that's a very real and present danger all the time. But purely from a governance perspective, is it really even possible for an entity like Bank of the Bahamas to select a board that can be significantly independent? In other words, let me put it another way. Is it even possible for a Bank of the Bahamas type entity to put persons on the board who are not politically or such connected, such that the board will be more independent? Is that possible? Anyone can answer. It's not a political question, it's a governance question.
Well, let's put it, they can do it. In the past, it's never been done.
Never been done, correct?
So like I said, it just happened for the first time, I think, in what, 3 years ago.
But
where
only
they-
at the minority level.
Right, where they decided, no, we'll be, I guess, to be more transparent, we'll now have a minority person at the minority level on the board.
Yeah, but if they really want to be transparent for real, they might want to put such a thing in the majority side of the board. Then that would really send the message that we have a board that's ready to do their thing. How's that? From a truly governance perspective. And here's an example that is public knowledge. Has anybody ever heard about a certain entity where some loans were transferred from Bank of the Bahamas into that entity for processing? No?
Bad
No,
debt
sir,
facility?
it's not me.
What is it called?
I was asking if you were referring to like facilities that went bad. Bad debt.
Yes, I am.
You're talking about Resolve Bahamas?
Yes, we're talking about Resolve Bahamas, which is no secret. Resolve Bahamas is public information, correct?
Yep.
So we don't have to worry about it being like, this is secret, we can't say. This is a public information thing. Now, does anybody know what was transferred into Resolve? This is a governance class, so
A lot of non-performing loans were transferred off the books of Bank of the Bahamas into Resolve Bahamas.
yes. Does anybody know the estimated dollar value that was transferred to Resolve?
Something to give you nightmares.
Sorry?
An amount that would give you nightmares.
Anybody knows the estimated amount that was transferred to Resolve?
Millions.
Well, for us, it's equivalent to billions because of our size. But the actual amount that was transferred to Resolve was roughly $500 million.
500.
500 million. Remember now, we only have 400,000 people. Some of them are this and that and the other thing. But anyway, 400,000 people roughly. So half of $500 million in bad debt or unpaid loans were transferred to Resolve for presumably collection purposes. From a governance perspective, the question is, from a governance perspective, how did that happen?
We could start saying like Chris, and then everyone is getting a loan who wasn't qualified for the loan.
Okay. But notice now,
I think you tread on a political.
no, we're not talking about it from a political perspective. We're talking, this is a governance class now. I'm not saying anything with EPs in it. This is a G class, governance.
I'm looking at that question you asked, you know.
I know. It is a deep question. Nobody's talking about it anymore. We have forgotten that it represents $500 million of money that should have been collected by Bank of the Bahamas. Anybody, how many zeros are in 500 million, anybody? How many zeros in 500 million? That's another, you don't even remember right off how many zeros. That's how serious this is.
8.
And how many?
8.
8.
Yeah.
8. Okay. So if you guys who are trained, practicing professionals have to think about that, imagine how many Bahamians can't even conceive it or not even aware. 500 million in unpaid debt outstanding by Tingham and Tingham Dam. Yet, if I don't pay my little stinky $300 loan payment, I missed 1 month because I had to fix my car. All hell,
Scotia
Right.
coming after you.
Scotia and all its doggone, whatever they have behind it. The full thing of the federal government, like we like to say in the United States. Yes, they will run you down in hell. But nobody's running down that 500 million in hell from a governance perspective. Anybody knows why? Is that good governance or poor bad governance? We all know it's bad governance. We're not going to say it's any particular name, just the incident itself, just like the audit firms. It's bad governance. That's some serious, see? Which means that any future board should be bringing up that incident every board meeting so that they are reminded that that should never again, from a governance and board perspective. See, that is our own local topology, by the way. Anybody knows what a topology is? We have money laundering topologies, don't we? Don't we? Well, whether you like it or not, somewhere in your professional life, you'll be confronted with these things in one form or another. I'm just here to be, like Alison say, the devil's advocate, but not really. These are things that's public and known and required to know. A topology is a case study where things have actually happened to give an rundown on what really happened. So this resolve thing is our own local topology that certainly at BOB's board level should never be forgotten, obviously. Imagine what 1/5 of the $500 million could do. How much is 1/5 of 500, anyone? 20%. What is 20% of 5 million? I mean, 500 million. Anyone? I don't mind if you use your calculator.
No, hold on.
I know you got to put in all the right zeros now.
You said 20% of 5 million?
500 million.
At 100 million?
100 million, 1/5 of 5, yeah.
How much is it?
100 million.
100 million.
100 million. Now, folks, we're talking about it from a governance perspective, but close your eyes for a moment and think, what can be done with $100 million? Anybody thought about that for a moment? A lot? A lot?
A lot.
Yes, a lot.
Yes, sir, a lot.
Yeah, a lot. My. Grandma needs cataract surgery for 5,000. We could just pay it. Can we not have 100 million? Can we?
Yes, sir.
So she don't have to say, "Oh Lord Jesus, I need to go beg from everybody to get my eye fixed." Couldn't some of that 100 million help grandma and grandpa?
Yes, sir.
My.
That could help me, not Grammy.
I know, I'm not checking for no youngsters who jiving. And you're gonna have your time. I'm talking about the elderly who've already committed their lives to the service. And now they cannot afford this crap. See my point? But it can also help you too. I just pick on grandma and grandpa because they like that. That's my point. And you're cheering them. Anyway, point I'm making is, class, things start off as a governance issue. If they are violated, they can become a major issue, as we can see. And this resolving is just our own local tragedy. These tragedies are everywhere in the world that occur because of poor governance. That's really the point. And so now it has become a topology for us in the Bahamas who care to remember or who wish to be reminded. Because some of us don't care to remember, nor do we wish to be reminded. And half the people in the country does not even know it exists to begin with. Okay, so you guys have a huge responsibility from a governance perspective going forward. In your firm, in your daily lives, whatever the heck you're doing. Okay? So that was just a reminder as we close off our guiding principles discussion.
Mr. Wilkinson,
Yes.
before you close out, we have an interesting situation that's playing out in today's time with Donald Trump.
Donald Trump?
Donald Trump and his business, Trump Industries.
Okay.
And how he avoided paying taxes or the minimum taxes for so many years by fudging the books.
By fudging the books. Okay.
Yes, and
Yes.
and the duplicity of his accountants in helping him to do it. So that's going to be an interesting thing to play out in the media, because they're going to have that aired publicly when that trial begins, right?
Yeah. Yes, it is.
Hasn't his accountant already went to jail for it? His financial consultant?
The accountant already went to jail because they already proved this thing, but they still got to bring Donald Trump over charges. Try him.
Well, let me put it this way. If they have evidence to prove that that is true, then if they have evidence to prove it, then so be it. Remember, they have been trying to indict this guy from the beginning, unsuccessfully. They have impeached him tried to impeach him 2 or 3 times. Those of you who are involved in politics of any kind, you might have an idea as to why this is so. And it has nothing to do with Donald Trump himself. Okay? A lot of people don't realize that it has nothing to do with Donald Trump, the man. Okay? Politics is a strange, bad fellow. They've been trying to get Donald Trump off the scene, not because of the man Donald Trump, because the man Donald Trump is no worse than any one of them who are bringing charges against him, the least of which is Joe Biden. Everybody knows he's a prejudicial criminal, and his son, and his family. That's no secret. Okay? That is no secret. So this thing about Donald Trump, it's not about the man, whether he goes to prison or not. The idea is they need to get him off the political scene.
So he would run again.
So he wouldn't run again. It's nothing to do with the man. Okay? Remember, politically, and I'm glad you raised that question. Even if they find the evidence eventually, if they find it, the objective is to get him off the political scene. Because remember, Donald Trump's politics is this: there will be no abortions under my administration. Under the Biden administration, they condone it. Almost, even if the child is almost 9 months old, they say it's okay. Break the child up and pull them out and dump it. I don't know about you guys, but I can't support anyone. I don't care who the hell it is. If it's my 90-year-old mother who supports that nonsense of innocent children, I don't care who they are. That's my personal position. But that's what Donald Trump's politics is. Donald Trump supports putting the Bible back in school, prayer. They don't want that. Donald Trump does not support LGBTQRST, the full alphabet. They can't have that. So we have to be careful. It's not about Donald Trump, the man. It's about what his politics represent, which they saw when he was president the first time. No way under the sun can they have that, at least not the opposing group. And therefore, this thing is not about the man. The thing is about getting, in my opinion, let me put it that way, it's about getting him off the scene so that he cannot return on the scene with those conservative practices that once upon a time represented the United States of America. See my point? Unfortunately, sad but true, because we all know Donald Trump.
Quiet.
Donald Trump's son. What is his name?
Donald Jr. Remember Donald Jr.?
Sorry, not Donald Trump. Joe Biden. What's his son's name?
Hunter Biden.
Hunter.
Hunter.
The evidence is out the door on Hunter's clear as sin. Everybody knows that Joe Biden is a gangster from 40 years ago. Anybody who knows anything about anything,
The unions.
go back and study the history, and you'll be shocked to discover what you discover. Right? So yeah, it's going to be interesting to see how this plays out one more time. Remember, this is not the first or the third time they come after this guy. Maybe they might be successful this time, but even if they are, it doesn't change the fact that the policies that currently exist in the United States is going to create major problems for that country down the line. And by extension, countries like the Bahamas, that's our country, who like to what? What do we like to do, class? Copy.
Follow.
Yeah, not, yeah, follow. Copycat.
Like they say, if the US if the US sneeze, we can catch the cold, right?
Thank you. Okay. Now, everybody's entitled to their opinion. Again, this is just my opinion of it, and they're going to bury me with this opinion. So it's going to be interesting to see how it's going to happen. But me personally, I cannot support any government, anybody who agrees with killing babies, innocent children, period. With all this other crazy stuff, you're not a boy or girl, you're this, that, other, pan-American, pan-agenda, multi-men. It's absurd. And I don't want anybody to come. No, well, that's just my opinion. Okay, thank you so much for raising that.
Ms. Wilkinson is an interesting, because Donald Trump is not a perfect person. He has flaws and he has his faults, but God uses whomever he chooses.
That talk on it, almost breaking my mouth. Yes.
God can use a donkey. Why not Donald Trump? God uses whomever he chooses.
Yeah. Look.
To bring about what he needs to have done, right?
Mother's sick. Now you're trying to.
But I mean, I feel like Donald Trump, though he has his ways, he was, let me not say perfect, he was a good president in terms of he brought a lot of things that happened in the dark to light. Like, if he was racist, he'll let you know he racist. He and just could try to act decent in public and then behind closed doors, do what he has to do. He brought a lot of problems that Americans and actually more African Americans that they were actually having. He brought a lot of that to the surface.
Americans in general, lot of the bad governance crap he brought to the surface. Stop killing our children. Put prayer back in the school. Stop spending government money to change people's genitals they were born with. Stop this ABC LGBTQ alphabet nonsense. They can't have that, because that's the way half of America wants to go. And anybody who's not going that way, dog, eat your lunch. That is a very serious thing.
Sorry to say, the first Black president is the one who really started all this garbage.
Of course, which we don't have much to say about. Because again, like Resolve, We don't want to talk about it. The first Black American president stood up and said, you should be able to love who you want. If you're not a boy or girl, you're other. You're this. What the hell is that? From the first Black American. Anyway, let me leave that. Okay. I don't know who started me off on that. Whoever said the thing with the chat. Okay.
That be me.
Yeah, cool. So yeah, it'll be interesting to see, but whatever it is, we have to be careful as a country and as a people that we keep things in order. Otherwise, we'll go down the same road, whatever that road is going to be. I don't know how many people in here believe in the Bible, but if you do, that road is not good. Even if you don't believe, it's not good. That's my point. Okay. All right. That's my governance 5 cents. Because see, this discussion that we're having these last 10 minutes, this is a governance issue as well. That's why we say, after all these things, govern yourselves accordingly. Just how we're studying all this, just how we study. And guess what? A lot of these things that we are impacted by affect what we do when we go on the job. See? So if you're practicing poor governance away from work, then when you go to church, you're going to practice it. When you go to work, you're going to practice it. And that's the problem with governance issues. See my point? So even if we want to be tempted to say, well, this has nothing to do with governance, it has everything to do with it. That's what's crazy. All right, for sure. All right, some food for thought. Thank you for that little practical thing, caused me to jump off the deep end for a moment. Yeah, that's good. So now we can move on from our general guidelines to a more specific area, which I'll say a few things about, and then we'll pick it up next week. If you haven't read the central bank guidelines on corporate governance, please go ahead and do that, because what it does now, it moves us from the general international OECD type guidelines to our particular model in the Bahamas for the governance of financial institutions, and generally speaking, by extension, other local institutions in the Bahamas. So you get to see more specifically how our regulators feel about proper governance and how we feel as a country generally about proper governance in our own country, outside of what we were talking about internationally, which included us. Now we get to see our own little thing going on through the central bank guidelines. And again, remember, the central bank is responsible for licensing financial institutions, and therefore these governance guidelines, even though they're not prescriptive, they're not saying you must, if you don't, we're going to lock you up. And this is the prison term for this, that, and that. It's not prescriptive like that. Okay? It's a principles-based guideline. They're telling you what you ought to be thinking about doing, what the central bank and other regulations, like regulators like the SEC and other commissions would like to see you doing, Compliance Commission, Insurance Commission, and others. And if you violate them and they come in and do inspections and they see them, they will raise them and they will encourage you to change them. If you do not change them, if you're like those audit firms and other companies who violate over and over and over, thinking nothing is going to happen, be assured that going forward, at least in the Bahamas, some things will start to happen. Regulators have more power now than they used to have. They might even have less patience now than they used to have. They're asking entities, financial institutions and entities to please, we are here to work with you. These are our guiding principles. We're asking you to make the necessary adjustments to conform to them as far as possible. And if we make any recommendations that you need to change your program, please be prepared to do them. Otherwise, you may force us to do other things that heretofore in the Bahamas we didn't want to do, because we are a bunch of friendly regulators and others who just like things to be done properly. Okay. Of course, like any other people, entities, when you're really, really nice, they think they can take advantage of you and or the system. So these guidelines, though not prescriptive, principles-based, making suggestions of what you should be, we have to consider them very carefully, especially those of us who are in financial services of any kind, and even if you're not, because you'll see that many of them are consistent with the guiding principles, OECD stuff that we talked about. And therefore, we should continue to, see that word, govern ourselves accordingly.
Can I interject?
Yes,
Yeah, talking about those, what you just mentioned just now, I just was at the Bahamas Financial Service Board AGM meeting
yes,
last night,
yes,
and the Attorney General was talking basically about the same thing, and then the requirements the OECD and the EU and all of those putting on the Bahamas.
yes,
One of those things he said is that the government is now looking into, because of some of the demands they had, it's now giving the regulators, such as the Securities Commissions, as Insurance Commission and others, more tongue or more tooth,
right,
and making, I guess, making decisions and demanding certain things, overseeing certain things. So there could be some changes coming on.
there are some changes coming on, for sure. Uh, those changes are expected to involve a lot more enforcement action
Yep.
against institutions and entities that did not occur before by the various regulators. There will be mounting fines for those persons who do not want to comply or do not want to comply in the required time. There will be greater penalties for entities who are repeat offenders. You see, we have some, remember, it's okay to make a mistake even twice, or maybe even thrice, depending on what it is. See, 3 times. But we have some repeat offenders, like they're just totally arrogant about their thing. We'll do this until we're tired. But for those repeat offenders, they too can expect to see the changes that are coming. And I wouldn't be surprised if some of those changes might even threaten their very business. Hopefully not. Hopefully they get it before we start talking about suspensions and revocations and all those funny words that are within the authority of regulators. Okay? So yeah, he was absolutely right. He knows he's the Attorney General. He gets the information firsthand. And if he's saying it, no doubt it's on the way for sure. Okay? Something to think about by firms as we go about our normal day-to-day. And again, governance requirements are not designed to make you miserable as an entity. They're designed for you to run better and to keep everybody happy, comfortable, and secure in the work that is being done. And remember also, governance doesn't only impact the firm itself directly, it has certain reputational implications as well by jurisdiction. So when there's a scandal by an entity in the Bahamas, for example, then the thing goes international, viral in 2 seconds flat. Before you know it, people all the way in China, India, in their own native language, Africa, talking, this happened in the Bahamas. They don't even know where the Bahamas is. That's how serious the implications are. Okay, so we can't only think about our firms, even though that's the primary responsibility, but we have to think about the reputational damage to countries and jurisdictions even. Okay, for sure, as we go about trying to do our compliance work, our corporate governance work. Okay, so remember before we break that this thing about governance really deals with the manner in which business affairs are conducted by everyone in the organization, how we direct those affairs, how the board of directors carry out their work along with senior management to make decisions that are good for the entity and the country and the jurisdiction in which they operate. So now when we come next week, if you haven't read this section yet, please go ahead and read it. When we come next week, we're going to talk about specifically the governance requirements from the regulator, in this case, the central bank, but by extension, it relates to all regulators in one form or another. And then we're going to talk a little bit about some ethical requirements to think about from a governance perspective. And then, time permitting, we'll have a little chit chat about the case. If not, we can pick it up after the examination in the next session. All right, so let's go ahead and do that. The section that you have on ethics and compliance, go ahead and read that if you can get to that, but certainly please read the CBOB guidelines so you can be at least familiar with it. And then we'll get into our discussion of that next week, along with the ethical and compliance guidelines. All right, you guys have been fantastic. So until next week, please be safe. And I'll see you guys when we meet again next Saturday. Remember, governance issues are everywhere, whether you're aware of it or not. We all responsible for dealing with them, recognizing them, reporting them, and trying to put into practice some of this stuff that we are discussing. Because at the end of the day, I think you've seen by now how critical, how serious it can be, not only from an individual level, but from a corporate level and a country jurisdictional level. All right, so good luck with all that crazy stuff you have to deal with, and I'll see you guys next week. Okay?
Good evening.
Good evening.
Take care. Good afternoon.
Thank you. Good evening.
Bye-bye.
Bye.
I'm going to